Welcome back to the channel. My name is Harold. Today is Thursday, April 2nd, and in today's video, I'm just going to be going over how I lost $200 day trading ES futures. So, getting right into it, today we lost $200 trading 5 micro ES futures. We had an initial target of $431, trade risk was $168, and the planned R multiple was 2.56R. We were in the trade for about 6 minutes before getting stopped out. So coming into our daily plan, we had our previous day value areas up here, and price was opening over here. Overnight, we broke out of the previous day value areas, as well as the weekly value area, and held the weekly value area, and we continued lower. So this showed me that we most likely might have not even retested this value area during the market open. And if we did, then that was more of a bullish sign to take long than to take it short. So in the morning, my plan was pretty simple. I was using this value area at 65.57. If price was able to retest it and break it, then I was looking to target right over here at 65.80s. If price was unable to break this level, we held it, then I was looking to target this level right here at 65.45. The reason I'm targeting these levels are because they're the high volume nodes. So this is the next point of resistance on my charts. That is what my target is. So the market opened right over here. We initially saw a dip, we held, and we were bought up with interesting signs of buying. Pretty much there was just signs of divergence here. Even when we're buying, we have sellers, right? Negative 1.54 delta. When we're buying, we don't really have much buyers here. 0.07 positive delta. We're getting bought up here, 5% delta, but the shape of the footprint is diverging as well. We want to see what? We want to see a P when we're moving upwards, but we're seeing a B showing weakness, and that price is not willing to accept higher prices. So our first point of contact right over here at our key level 65.57 was a break. So on breakouts, this is what I look for. I look for an increased volume. That's what we got, increased volume. 12,000 lots from originally 11,000. We get the P/B shape. So this is a D shape, not a P or B, just because we have price up here and we have price up here. So you can't really say that this is either a P or a B. Sorry, my mouse is glitching. It's just not drawing it. So because we didn't have a P or B, I ruled this trade out and I said, I'm going to be looking for reversals now. Because the breakout was weak, I'm looking for reversals. So on our reversal, these are the confirmations that we look for. We look for increased volume. So this was the candle with increased volume. We look for absorption or exhaustion. This area actually does show forms of exhaustion. We look for a shift in delta. So when I say shift in delta, I look for from positive to negative or negative to positive. Since we are trying to take a reversal to the downside, we need to see negative, right? We need to see selling strength, which is negative delta. So here we did not get a shift in delta. We still stayed positive when we broke the level. And then we did not get a decrease in volume either. We got an increase in volume from here to here. So now the next area I was looking at was this candle right over here. Why? Because we broke our level, we broke the high, and we re-broke the key level that we were looking at. We got absorbed here. So as you guys can see, increased volume, 15,000 lots from 8,000. Absorption or exhaustion, we get absorption on this candle. Shift in delta, no shift in delta. So if I'm looking at the same candle, since this candle is green, I'm looking for a red candle. No, not red candle. I'm looking for a red delta, negative delta. So we move on. If we move on, we look for a decrease in volume, which we get from 15,000 to 8,000. We get the shift in delta, right? From positive 1.4 to negative 1.68. We also get absorption. So I enter the trade. This was a good trade. We were at a key level. Maybe we were overextended on the day and we weren't going to follow through. So I took my entry here at 65.62.5, targeting the 65.45s. Why? Because this was the high volume node with my stop at 65.69. Just wanted to give some room for error from this high. Normally I do sit at the high, but because I had a little bit more to risk, I risked it more. We didn't get stopped out here. We got saved by the tick, and eventually we got stopped out over here. So to me, this was a really good trade. This was a well-executed trade. The only thing is that coming into market open, something I did mention was that if price was able to reach this level, this key level that we're looking at, that was more of a bullish sign than a bearish sign, right? Because we were able to reclaim this level, we're able to reclaim this level on the day, that is more bullish than bearish. So that's something that I should have been looking at, but in the end, just looking at these confirmations, just terrible confirmation, right? If you guys traded today, you would have seen what the market did, but it was just terrible confirmation. Even on the way up here, it was just a lot of divergence. Even here, we break the level, but with the B shape showing non-acceptance. We break the level here, but volume is weak. And we're not getting the P's. We're not getting true acceptance here. And even when we break over here, we're getting a negative delta on this strong breakout, showing that there's more sellers here attempting to push price lower, but they can't. And yeah, the market ended up having a crazy session once again. We weren't really able to catch anything. But that is it for the day. We took a trade that we were supposed to take. It didn't work out in our favor. And you just got to deal with the losses sometimes. It's just part of trading, and that's what it is. So I hope you guys enjoyed the video, and I'll see you guys next time. Peace.